Forex traders, you're welcome. This is Kari's Trading Institute, and today I'm going to show you how I caught about 150 pips on GBPUSD. Guys, you know me as usual. I would like to know what's the institutional order flow of the higher time frames, because that will be the general liquidity, and I would like to analyze the dollar index first before I go about analyzing the currency pair I love to trade intraday or intra-week. Okay. So this is the dollar index dollar index daily chart, and I've already seen. So this is the dollar index daily chart, and what I saw is that I was anticipating price to trade up into this sell side imbalance and the buy side inefficiency, as you can see outlined here. Okay, the last low and the last high here, or volume imbalance. Okay, by the left, this little area where you only see the candle wicks without the candle bodies, okay, closing that little gap, so it's called volume imbalance. And as you can see also, there is a low and a high that has been unmatched, so that also is a fair value gap or sell side imbalance and a buy side inefficiency. So this was the general liquidity for me, literally, because price had taken sell side liquidity before here, and price had formed a bullish order flow after break of structure to the upside. So you can see this was a break of structure, and price had formed a bullish order block after the break of structure. Here we had a break of structure and a bullish order block, so I was anticipating that price was going to retrace this bullish order block and trade into that sell side imbalance and the buy side inefficiency. This was literally the bias on the dollar index. So just go to the 1 hour time frame to further refine this trade setup. So on the 1 hour, you can see what I saw here was price created an external range liquidity here. Price took out the external range liquidity. The next thing I'll be expecting is price to retrace into a discount internal range liquidity. When you put your Fibonacci from that low to the high, literally the swing low to the swing high, I would like to see price trade into the discount, which is below 50% of this Fibonacci level. You can see that's the 50% of the Fibonacci level. So what is the institutional reference point or internal range liquidity residing below this 50%? Remember the video where I taught the internal and external range liquidity? If you haven't watched that video, please go through the videos on the channel. You need to watch the video where I specifically taught internal and external range liquidity, so so that you understand what I'm saying in this video. So what are those internal range liquidity void or fair value gap and order block? And as we can see here, we have a fair value gap. Okay, so I was looking to see price trade into this fair value gap and give me a further confirmatory entry, and I will be looking to enter this trade. So today I saw that price had traded into that fair value gap, and we had a break of market structure to the upside. Price retraded into the bullish order block. This is the bullish order block price traded into. Okay, and this is today's candle opening. Okay, 0 GMT. This is 1 a.m. okay, the candle start of the Asian session, and what I saw here is that price opened and were traded up, okay, showing willingness to go up. What was the next thing I did? Just go to the 15 minutes. So this is the 15 minutes time frame, and these two vertical lines are the Asian session zone. Okay, I outlined the Asian session. Okay, then in London I was looking to see a bullish break of structure so that I will buy in line with the daily institutional order flow. Okay, so look at what I saw. This is the start of the London session between 8 a.m. to 11 a.m. GMT +1. That's the start of the London session. So this is the start of the London session, and I was looking to see a break in market structure to the upside so that I would be a buyer from that time. Okay, so that's the London session. So I couldn't see a bullish break of structure in London, but as at New York session between 1 to 4 p.m. GMT +1, look at what I saw. I saw a break of structure to the upside. This bullish break in market structure was what I saw. Then I outlined the internal range liquidity. As you can see here, it's a bullish order block that has a fair value gap. The candle with the largest body, that is my most preferred bullish order block. So I just outlined that candle, and I was looking to buy the dollar once it trades into this other block, while I'll be selling my favorite currency, GBPUSD. Where will be my target? This is the buy side liquidity, okay, and the daily sell side imbalance and a buy side inefficiency. So let's go to GBPUSD as I show you how I caught 150 pips on one trade. So guys, this is my GBPUSD trade. Okay, on the GBPUSD, since we already know that we have a bullish bias on the dollar, that means we want to be selling the pound dollar, okay, because it's a foreign currency. Quickly, let's just take a recap of the weekly time frame so I show you why I was interested in selling GBPUSD. I was interested in selling GBPUSD literally because GBPUSD had traded into a weekly institutional reference point that was very significant. Okay, you can see the sell side imbalance and the buy side inefficiency, and this is an institutional order flow entry drill. Price traded into it, and price actually took out external range liquidity residing above here. What's the next? We need to trade into internal range liquidity. And what is that internal range liquidity? You can see fair value gap or the liquidity void here, fair value gap, another block. This is where I'm expecting the pound dollar to trade into on the weekly perspective. Then on the daily, you can see that that same area has been refined, and this is the drawn liquidity, sell side liquidity, fair value gap with another block. This is where I'm looking to see the pound dollar trade into. Okay, so I have my higher time frame bias. Then on the 1 hour, I need to see price create an external range and trade into internal range so that I can take a trade. So look at this, price created or took out external range liquidity. Then what will I be looking for? An entry at internal range liquidity, which is the other block, and the fair value gap. Okay, so price traded into this internal range liquidity, go down to the 15 minutes time frame and look for confirmatory entry. So that was how I was able to get into this trade. I just went down to the 15 minutes and I identified breaking market structure to the downside. You can see that price broke structure. I took my trade, immediately price returned into this other block and my stop loss above this high, That's where I actually put the SL. And look at what we are able to catch. We caught 150 pips. Where is my take profit? The take profit is the relative equal lows here. Price traded into that take profit region. So guys, this was how I was able to take this trade from this entry to take profit. If you like the video, quickly click the like button. Don't forget to subscribe to this channel if you want to see more of my trade commentaries intra-week and intra-day. Until next time, I wish you good luck, good trading.